Good morning, everyone, and welcome to today's morning report on Thursday, the 26th of November, with me, Rich Perry, market analyst at Handtech Markets. The European session has got off to a fairly positive start, and that's come off the back of a pretty decent session throughout Asia. Although the US markets, Wall Street, didn't really do a great deal yesterday. Very quiet in front of the Thanksgiving holiday that they've got today, and which sort of drifts into tomorrow, really. So the back end of this week's likely to be rather thin on volume, and that could well produce some rather erratic moves on the markets, but you can go both ways in terms of the markets being rather quiet as well. So at the moment we've got Forex markets which are slightly sort of taking back some of the those sort of moves against the dollar yesterday. There was a slight sort of air of consolidation, but the dollar's just gaining a little bit of strength again today. But once again, it just seems as though any sort of rallies are being seen as a chance, any corrections against the dollar are seen as a chance to buy once again, and the euro remains under pressure. The sterling is lower again today. Interesting that we are seeing the yen, which is strengthening, and also the kiwi. But let me just show you the dollar index, which remains very high, very strong in the last few weeks, really, as those expectations of a Fed rate hike in December continue to play out. And you look at the Treasury yields as well. The 10-year slightly down again, but certainly the 2-year is that reflection of that rate hike in December that we're likely to now see. So markets remaining of that opinion. Now, the oil price is back at the key resistance, which was the old breakdown of 43.20 on that WTI. That remains the resistance area, and is a very interesting level that you should watch out for there. But certainly it looks as though at the moment that the markets are just playing out this strong dollar move, and that continues to be the case. So, in terms of our economic updates that we have today, sorry, wrong one. We've got nothing really. As I said, it's Thanksgiving in the States, so we've got really not a great deal to drive markets today until the Japanese inflation data this evening. It's expected to remain at negative 0.1%, so remaining in deflation as it has done for the past couple of months in there. So that could well again sort of move towards the possibility of a BOJ, some sort of further easing by the BOJ. So that could put the yen back under pressure again. But at the moment, the yen is fairly solid at around that 122 mark. But as we see, I'll show you in the analysis in a bit that that yen is, generally speaking, the dollar yen is moving higher. So what we have as my chart of the day today is the Kiwi. Now we've had this move on the Kiwi. You've got the let me just quickly show you the Aussie actually, because the Aussie has been really strong, actually pushing higher, breaking that downtrend, pushing higher over the last few weeks. But the Kiwi's not really been able to match that move, and what we have seen on the Kiwi is a move back towards this key resistance here, this key overhead resistance, which was the old support around 66.15. Big floor of that range really in October that broke down, and you've seen the move back towards that ceiling really there at 66.15. That is a key resistance, and between 66.05, 66.15 sort of is that resistance. And what we've seen today is, if I can get the crosshair on the move, no, it's not doing it. Okay, is the Kiwi, which is sort of again buffering up against that resistance, not being able to really break through. The reaction high is 65.95, so just not quite being able to make that move. But there is a near-term pivot level. I'll put the crosshair there around that 65.40 area, which seems to be a fairly consistent between 65.40 and 65.50, consistent level of a pivot on this chart. on the near-term basis. So maybe a move back towards 65.40 would be a buying opportunity on this, but certainly at the moment that resistance overhead at 66.15 is the overhead barrier to further gains. But you do see the momentum indicators improving on the daily chart. You've got the stochastics which are rising quite nicely, quite strongly actually. In fact, RSI yesterday pushing up to a 3-week high, and also the MACD line's sort of starting to bottom. So you are seeing a bit of a turnaround in sentiment. Whether this will be a significant upside break or not remains to be seen, because you've still got this barrier in place, 66.15. That needs to break. If you see a break above that, you'll sort of open really a move back towards potentially that 68 area, which was the last real resistance that you got on this chart, 67.90, which was that late October high. But certainly at the moment it seems as though the test is going, but it could well follow that Aussie higher, and if that is the case, then you could see a move above that 66.15 area. So it certainly is one to watch, I think, at the moment. So with that in mind, I wish you good luck in your trading on the Kiwi, and I will speak to you later. Thank you.